Senator Wyden brought up the idea that there's rich that take advantage of the system. Joe Biden and his wife actually did that. They took money from income that they should have paid Medicare tax on. They put it into an S corporation so they could take money that they were from paid speeches and books, put in there so they didn't pay the 3.8% Medicare tax under the Affordable Care Act. And that's something that clearly ought to be fixed, because it's clearly unfair that people are doing that. I think it's very important to every state, but clearly my state, that we don't see a reduction in benefits for Social Security and Medicare. So I have a bill that would stop that. Unfortunately, I haven't had the opportunity to get Senator Schumer to put on the floor. But it would be, I think none of us should be supporting it. And there's lots of ways to reduce the cost of delivery of health care. But one thing we shouldn't be doing is ever talking about doing anything to reduce the benefits of Medicare and Social Security. And I know Senator Johnson brought this up. If we don't get this budget under control, how is interest expense going to come down? So, Mr. Capardo, what do you think? Do you think if we continue to run $2 trillion a year deficits, the interest costs for not just for the federal debt, but for buying a house? Mortgages are now up to almost 8% for a 30-year mortgage. Car interest rates are up to a 23-year high. I think credit card might be the highest ever. So if we don't get the budget in control, is our interest expenses going to come down?
No. According to CBO's current projections, by 2050, the net interest payment on the accumulated debt would be 9.4% of GDP, which essentially means, every dollar that comes in, half of what we're raising in revenue would basically be going toward net interest payments under current projections. So that's too much, obviously. And so well before 2050, we're going to need some action by Congress, I think, to kind of do both the revenue side and the spending side.
And is Medicare dependent? Medicare paying for Medicare dependent on what how much money we have in revenues? So if we're going to spend it on interest expense, we're going to have less money to put into Medicare?
Well, actually, it doesn't quite work that way. I mean, the way the Medicare Trust Fund, HI Trust Fund works is, at least in theory, if it ran through its reserves, the spending is going to be cut across the board probably. So that's one reason why this is such a big issue and exhaustion of the trust fund is a concern. Now, a lot of people think, well, that would never happen. Congress would step in and say, well, we're going to pay the benefits anyway and borrow the money. So in some sense, what CBO is projecting is we're just going to end up paying the Medicare benefits one way or another and have to borrow it from somewhere. And I think that's the cycle that we're in that needs to be thought through about how to get out of it.
I have breaking news to share with you today. The Internal Revenue Service has just made a major announcement. The tax agency is warning many Americans to take action as quickly as possible before an upcoming January deadline. Economists have also unveiled new data that shows that prices are reaching the lowest level this year. My dear friends, please make sure that you watch until the end of this video to hear about all of the details. Also, to say thank you for being part of this community. Every Friday, I will be announcing several winners for the Walmart gift card giveaway. If you would like to enter these weekly giveaway, friends, please click and like several of my videos and then comment below the keyword of each video that you watch. The more videos that you comment on, friends, the greater your chances of winning these giveaways. If oil prices remain low, drivers can expect a decline in pump prices throughout the holiday season. According to the latest report from AAA, the average price of gas dipped to $3.10 for the week ending December 14th. That is a 10-cent drop from the week prior. Gas prices on average are 25 cents less than 1 month ago and 11 cents less than 1 year ago. AAA spokesperson Andrew Gross told Fox News, "We are forecasting that approximately 104 million Americans will drive to their holiday destinations this year, and they will be greeted with the gift of falling gas prices. With pump prices falling slowly each day, it is likely that the national average will slide below $3 per gallon by the end of the year. The West Texas Intermediate, an oil price benchmark, increased by 86 cents to $69.47 on Wednesday. Oil prices rose after the Federal Reserve announced its plans to leave interest rates unchanged through the end of 2023 and potentially lower rates up to 3 times in 2024. A Gas Buddy report notes that for a continuous 3-month period, the average national gas price has decreased and now has dropped to its lowest point in 2023. Patrick DeHaan, the head of petroleum analysis at Gas Buddy, has also recently stated, for the 12th straight week, the national average has continued to decline. Now it's at the lowest level of 2023, heading into the prime of the holiday season. As gas prices continue their descent, drivers are experiencing significant cost savings at fuel stations. Patrick DeHaan also recently said, with nearly 80,000 gas stations in the United States, now priced below $3 per gallon, and 23 states also see an average price of $2.99 or less, a higher number of Americans are predicted to choose driving as their means of transportation this holiday season. This year, we'll see a 2.2% uptick in the total number of travelers compared to the previous year, representing the second highest year-end travel forecast since 2000. AAA noted that motorists can anticipate paying a similar or lower amount per gallon of gas compared to the 2022 holiday season. The tax filing deadline in 2024 is still months away, but the Internal Revenue Service has warned that some taxpayers have to act by January 16th to avoid a possible penalty. The reminder is for taxpayers who did not pay enough tax in 2023, so by filing a payment on or before the January deadline, they can avoid an added fee, which might come in the form of a tax bill. For most Americans, taxes are withheld from paychecks during the year automatically, but for people who are self-employed or independent contractors, they are responsible for sending their own tax payments each quarter to the IRS during the year. The IRS says people who owed last year often find themselves in a similar situation at the end of the following year. Most income is taxable, including unemployment income, refund interest, or the sale of goods. Workers in the gig economy are also not exempt from declaring side hustle money. So with just days to go in 2023, taxpayers are already looking ahead to the next year. But some are still waiting on answers related to previous tax years. The IRS acknowledges that the agency continues to experience delays. The agency says it has processed all paper and electronic individual returns received before November 2023. Additionally, the agency claims it is opening mail within normal timeframes. This means that all individual returns received for the tax year 2021 or earlier have been processed if those returns had no errors or did not require further review. Of the unprocessed individual returns, 700,000 returns require error correction or other special handling, and 105,000 are paper returns waiting to be reviewed and processed. That is the end of my daily stimulus update video for today. Dear friends, thank you so much for being part of this community. I will be announcing several winners this coming Friday for the Walmart gift card giveaway. If you would like to enter these weekly giveaway, friends, please click and like several of my videos and then comment below the keyword of each video that you watch. The more videos that you comment on, friends, the greater your chances of winning these giveaways. Thank you and have a wonderful and very blessed week.